question isn't whether the Fed will cut rates, it's by how much. Will it be 25 basis points? Will it be 50 basis points? And what will happen to the price of Bitcoin? Will it go to the moon, or will a recession in the real world cause it to crash? Let's find out. What's up, everybody? This is Dante with Bitcoin Simply, helping you make sense of macro and markets in a simple way. Subscribe to get these updates so you understand the moves and are prepared for what's happening in the market, like today. Everyone sees MicroStrategy buy 18,300 Bitcoin for $1.1 billion, bringing their total Bitcoin treasury to 244,800 Bitcoin. Then they see MicroStrategy turn right around and propose raising $700 million more in convertible notes to buy more Bitcoin. All of this coupled with letters like Elizabeth Warren sliding in Jerome Powell's DMs saying we need to cut rates by 75 basis points, and the market is now pricing in a 50 basis point cut at almost 100% probability. And all of this is bullish. People are out here dancing like Jason Kelce, thinking that all of these things going together will simply mean that Bitcoin's price is going to the moon. But I want to bring a bit of soberness to this conversation. Just because you see Sailor stacking or Jason Kelce dancing like that, or a chart from Raoul Pal, which just shows M2 going up and to the right and liquidity going up and to the right, overlaid with the price of Bitcoin, and assuming that just because these things will happen, Bitcoin will go up and to the right. Over the long term, that's 100% factual. We're taking an unlimited supply asset, putting it into a fixed supply asset that has unlimited demand, and that is Bitcoin. Rate cuts typically aren't bullish for equities. In fact, it means that there's something going on wrong in the underlying economy, which there is. People are using this chart right here to justify that every time that there's rate cuts, well, it's just another good time to invest. But I think that the red areas on this chart, like the 1970s, 2001, 2007, and 2019, are actually better examples than all of the ones that are just simply all green. Rate cuts typically lead to a pullback in risk on assets by 20 to 30%. Like clockwork, rate cuts have been a leading indicator of recessions to come. And also like clockwork, just as soon as the market starts to plummet and head down into the dumps, there seems to be some sort of disaster, like in 2001 or 2008 or 2020, to allow for an unlimited, too big to fail bazooka to come into the market to boost asset prices to the moon. These things are entirely possible, but don't think just because rates cut that equities and Bitcoin is going straight to the moon. Again, this is exactly what happened in 2001, 2007, and 2019, and I think these are good examples for this environment. Manufacturing orders are falling off a cliff, which has been a pretty good indicator that things are slow in the real world and there's a recession. Commercial real estate delinquencies are spreading and getting larger, and they're not just in the office sector anymore. Small business profits are in the dump, and typically they're highly correlated with corporate profits of big companies. And as you can see, small business and corporate profits have been detaching rather significantly. One good reason is because small businesses aren't funded by these large sources of capital or the government or funders that you and I don't have access to. These things don't represent the real world. But as we've said before, there is a tale of two worlds, and we always have to be mindful of that. There's Main Street and there's Wall Street. Wall Street is headed by none other than Jerome Powell himself, the head central banker. And what is the central banker? He's a banker for bankers. So regardless of their mandate to keep unemployment regulated, that's not their real goal. Their real goal is to answer the phone when JP Morgan and Jamie Dimon calls. Because at the end of the day, it's just money. It's just all made up.
It's just money. It's made up. Pieces of paper with pictures on it so we don't have to kill each other just to get something to eat.
So what does this mean for your Bitcoin positioning? Well, I want to give a couple words of caution. Although I'm not an ETH guy like Brett, he does provide some pretty good charts online. One thing that he goes to show is that Bitcoin is very capable and has shown historic patterns of decreasing 30 to 50%. And if you look at 2017 specifically, the last time that Bitcoin was around when they were cutting interest rates, well, it fell from $17,000 a Bitcoin down to $3,000 a coin. And although I don't think we will see that dramatic of a drop, you can't rule these sorts of things out. Be careful not to back up the truck at these levels. When you run analysis through tools like the Nakamoto portfolio, you'll find that when the prices are ripping higher, you want to have smaller and more frequent buys. And when the price is dipping lower, you want to think about lumpier acquisition of more Bitcoin. This isn't investment advice, but I've run lots of portfolios, and that tends to lead to better returns. So, although Michael Saylor and MicroStrategy are all in all the time, they can be because they're a corporate company. They can sell more shares, they can raise more debt at low interest rates that you and I don't have access to. We live in a finite world with cash, with liabilities, with other responsibilities that don't allow us to just go raise cash immediately and all the time. But a good strategy has always been dollar cost averaging into Bitcoin, which will be the best performing asset in the world ahead of gold this year, 11 out of the last 14 years. Debt continues to be at an all-time high and is growing. Well, that's because this world and this economy needs debt to grow and to survive. Use this to your advantage. Again, you have an unlimited supply of money printing going into a fixed supply of 21 million Bitcoin with growing demand. This seems like a pretty good equation to have great returns. Don't overthink it. And with that, we're signing off for today. We just started letting people into the Columbus community, and I'm so excited to walk alongside you and many others as they navigate their Bitcoin journey. If you have questions about these sorts of things, Bitcoin wallets, how do I back up my Bitcoin seed phrase? How do I think about security? What is multi-sig? How do I secure my Bitcoin? Or questions about what is the Lightning Network? Or how do all of these things work together? Why does the price continue to chop sideways? What is Bitcoin mining? Well, I'll answer all of these questions in the community at joincolumbus.com. And with that, we're signing off for today. This is Dante Cook with Bitcoin Simply. Happy stacking.